Hey everybody, today we are going to talk about comparing loans and how to do that effectively. It basically boils down to what's my interest rate and what are you charging me to get it. So I've written those down here, and let's imagine in this first scenario you want to compare one bank to another. The first bit of advice here is to make sure that you get those loan estimates on the same day. Mortgage rates and what they charge you to get those mortgage rates fluctuate so frequently that it's really unfair to be comparing a loan estimate that you got a week ago to one that you received today as you're now trying to shop these loans. So that's number one. Make sure that both loan estimates are issued to you on the same day. The next thing I want to bring to your attention is what's called the APR. Basically, what this does is it takes your interest rate and it adds to it the other fees for the loan and expresses the total interest rate as an APR. So imagine this, you get a loan estimate and it says interest rate 5.99. And then when you scroll down to the next page, you see that the APR is something like 6.3. Well, probably that lender is charging you 1/4 of a point or something like that in order to show you a better interest rate. So when you're comparing the two, make sure you're paying attention to this APR number and not just the interest rate that's in big bold letters. The next thing I want you to pay attention to is the P&I. The reason here is that that's really all that's in a lender's control. They can't tell you how much your taxes are going to be, and they can estimate low on your homeowner's insurance, which might make monthly figures look a little different. But in reality, that's up to the home insurance provider that you select and outside of the lender's control. So pay attention to the principal and interest to see which monthly payment is better. And then the same thing goes for closing cost. They probably will estimate for you what are your your attorney's fees going to be, what are the recording fees and things of this nature, appraisal as well. But that's more or less out of their control. And what you need to pay attention to is just the lender fees, origination, sometimes administrative fees, underwriting fees, things like that. What are the loan costs? Throw out the other closing costs, throw out the taxes and insurance when considering the monthly payment, and now you know you're working with good numbers. So here's another example. Let's say that it's the same lender and you know about the APR thing and you're just considering whether you want to buy some points yourself. And so you've got two loan estimates in front of you. One of them has you paying $2,800 in origination fees because you're buying 1/4 of a point. And then another one has you paying $700 in origination fees because you're buying no points at closing. Well, the difference here is going to be $2,100, right? Okay. If we go back and consider the P&I that we had written before, we could see that, all right, if I buy this 1/4 of a point, my interest rate is reduced by 1/4, and that means that my monthly payments are now $20 cheaper, let's say. Okay. So we're just trying to decide, do I want to buy this point at closing? It costs me an extra $2,100 to do it, or do I want to keep that money and spend it furnishing this new house, right? So then we just take the $2,100 and we divide by 20, and then that would probably lead us to probably like 8.5 years before that $20 per month adds up to what it costs us here at closing. Now, if you're working with the Porter Group, we can get you in touch with the right people to let you weigh these options. And if it gets a little too confusing, send it to us. We'll make sure that you're looking at the right information. But hopefully with this video now, you're a little bit more equipped to understand your lending options.